Hey everyone, this is Ryan Mallory for SharePlanner.com. Today is December 12th, 2014. Doing an end of day, end of week Google Hangout today. And yeah, this has been a really tricky market to trade in so far because we'll focus primarily on the action here so far in December. You've had December 1st of November onward till Wednesday of this week. We had so from the 10th of December all the way back into the 21st of November, the market was stuck in a range. It literally wasn't doing much, and those are the hardest markets to trade because 50% of a stock's, probably even more, I'd say like 70% of a stock's price movement is related to the overall market. Now, if the market moves up 1%, how much it goes up, whether it's 1%, 1.5%, 2%, or only 0.5%, a lot of times depends on the, is going to depend primarily on the stock itself but in terms of the direction that a stock takes from day to day, it's largely hinged on the data or the index it's trading on. And then you have other factors like Apple, and Apple went up in flames one day, ceased to exist, they'll go out of business with it. And so there's a dependence on some other companies, like if you're some of these oil companies on Chevron or variants or whatever. But so you have a lot of factors that goes into a stock's price movement, but the primary factor that affects stocks is the overall market conditions. So when the S&P 500 is trading in a tight range like this, it can be frustrating because it's not given a lot of movement in stocks in general. Now, you can play these stocks that are trading off of news and they're getting hyped up like 30% in one day, and you can trade it. But guess what? It's such a horrible strategy to try to trade these stocks that are just news driven all because of some news piece that came out, whether it's an FDA approval that shoots a stock up 50-60%, or some kind of like massive amounts of upgrades or earnings or whatever. Because what happens is that you can't control the risk. So when you can't control the risk, yeah, you might be able to trades here and trades there, but you're going to get burned. And then a lot of times too, on those kinds of stocks that are popping that much in percentage value, there's not a lot of substance to those companies. So there's also not a lot of volume that's trading behind those companies. And as a result, the risk is just off the charts, whether you realize it or not. You're trading some heavy and risky stuff. So in the splash zone with SharePlanner, what I'm focused on is trading stocks that have liquidity, like Apple, like Yahoo, like Juniper, or a host or stocks of volume associated with the trade. Now, so when we get stuck in consolidation, sometimes these stocks, they're not moving as much and they're getting whipsawed and everything else. So you're waiting a lot of times for movements. Now, the market's eventually going to give you a direction. That's just a given. I mean, since the stock market was, created, there has been direction in the market. Historically, if you look at like a yearly chart of the S&P 500, let's see if I can pull one up here. Okay, here's a yearly chart of the S&P 500. If I guess it's pulling up here. Okay, going back to these, you can see that they're all up. Now you got like the 2000 crisis, and then you have the problems back in 2008 and everything that caused the market to experience some major problems. But overall, there's a direction on the yearly. If you look at the weekly, you can see that there's direction on the weekly. Of late, it's been all up. So the market does eventually give direction. It's our job to determine that direction and to trade accordingly. But now in the short term, it can be directionless. And that's what we've had from the 20th or so of November through, or 21st of November through like December 10th. It was like that. And then on, of course, on Wednesday, that's where we broke down. Now where it got tricky is on Thursday. Actually, I'm going to back up some and say December 9th, hold off hard on December 9th, and then it bounced back. Now, usually this kind of a candle, This kind of a candle you're going to see all throughout. It leads to a bigger jump in the market. You got one here back on the 19th. You got another one here on the 4th of November, and then I mean, you can just go all the way back the 15th of October. So I mean, it's riddled with when you get these hammer type candles for the market to go up. So the market was falling, and so the prudent action here, based on past precedent, is to play the odds and to say, okay, the market's probably going to go higher in the days ahead, but not so. This is where the market really threw a traders galore, and that was when it decided to tank like 30 the next day. The odds of that happening, if you just look at past precedent alone, is very, very unlikely. Okay, and then the next day, after you get that, you get an equal and opposite reaction where the market goes shooting higher. And this is where, for me as a trader this month, I felt like I started, getting some traction on this market. And when the market spiked higher, we got out of some of our long positions and then started adding some short exposure. And the short exposure hasn't been, it started showing signs today of getting on the right track. But until then, it was a little bit, it was a little sketchy. But as it was coming down, though, now all of a sudden you have a different market than what we had the day before, and then what the market had the day before that. So every day the market has been throwing curveballs. So market, well, first of all, you don't get 100% long and you don't get 100% short. You have to be patient, and you have to add positions where the market says, okay, starts giving you signs and clues that it's wanting to go in a certain direction. We're finally actually getting that after Wednesday, and then after the failure to hold on to those gains yesterday, then today became a much more likely scenario that we're going to sell off. And today we actually have a pretty good breach of this long-term uptrend. If you go back to February of 2013, you can see this uptrend is held on very well until September of this year. Actually, it was worse that the market broke below this trend line for the first time since February. And now today it's doing it again, and it's doing pretty decisive. Could we bounce back on Monday? Yeah, we could. But you can see that if we're going to follow this pattern, and so far it's very similar to the pattern that we've seen in September and October, there's probably going to be a stretch of down when it comes to shorting stocks, and then to ride that bounce back up. We did that back or I'm sorry, of October, and of course UPRO just kept on running because it's a S&P transitioning possibly from a bull market to a bear market. Okay, whether it's short term or medium term or long term, there's a transition period, and that can be really frustrating for traders because they're coming in. So then you start trying to push your will on the market, and that's where the traders just really can royally screw themselves up. If you try to push your will on the market, if you're just determined that market's going to go care, it doesn't even know who the heck you are, and it's going to go whatever direction. Key here is not project your will upon the market. Down days, up days, down days, intraday, up days, back up, and vice versa. And so the direction has been very hard to determine. Now, continue to see the pull down in the markets, then we just keep on riding. And this is a little bit different for us to see the market. Sell off like this in 12, 13, like 6 years of this. All right, let's see what we got going here. We had a little bit of a malfunction on the Google Hangout. It just decided to here. All right. Go on without the screen time to see if I can pull up the screen. There we go. Okay, I might have just shot myself in the foot there again. You guys can see. There we go. Same 500 to everybody there. Yeah, sometimes Google will do that. It just, sort of stop working. But, even as we're talking right now, you could see that bearish pick up in the market, and crude is still very good chance that we go under 2,000 here. Maybe not today, as there's only about 20 minutes left. But overall, this market is getting very bearish, and you play it based on the direction that the market plays in the market. That you have to be more concerned with trying to put in your market versus being aggressive with the new positions and just piling on while the market's wanting to rally nonstop. It rallied nonstop late October through November. Okay, that's where you have to be aggressive and piling on those new positions. December, it consolidates, so nobody knows which direction this market's going to go. Nobody. Okay, it wasn't until recently where the market starts showing its hand. So while nobody knows which direction this market's going to go, you have to position yourself almost on a day-to-day basis, give and take some. Okay, maybe you close out a short here and add a long here, close out a long here, add a short here, just close out some exposure altogether and get lighter on the market. But you have to do that. You have to go with the ebbs and flows of this market, because you don't know if it's going to just pause and then break higher into the year-end close, or if it's going to break lower and provide a huge shorting opportunity. So, if you're going to play this market and you have to recognize at a time where, okay, is it famine? And I don't like using the word famine to describe it, but there's going to be times where you can feast, and then there's going to be times where you just gotta wait for the next meal. Okay, so you eat and then you wait for the next meal. And so for most of December, we're in a wait for the next meal mode. Now we're starting to step back up to that dinner plate and see if we can get a pretty good meal out of this downturn coming upon here. So in any case, that's going to be doing it for now. We're about 19 minutes out from the closing bell, and I want to focus on some of the price action as we close out the week. If you haven't subscribed to this SharePlanner Splash Zone yet, highly encourage you to do it. You can get a free 7-day trial by simply going to shareplanner.com/zone. And there you can ask me questions, be a community of traders that are open, they're honest, and they provide a lot of great ideas. Even sometimes if I'm off my game, they're usually always on theirs. So yeah, for 7 days, and see what you think. If you have any questions, feel free to email me, ryan@shareplanner.com. Thank you all. Have a great weekend. Get well rested, and we'll be ready to attack these markets on Monday. Take care now.